Imagine you bought SpaceX at its IPO price. The stock opens higher, and suddenly, everyone is watching. Then it takes off. The price keeps climbing, and the excitement gets bigger. Investors start asking the same question. How much higher can this go? But then, the rocket comes back down. The stock falls sharply, and suddenly that easy money story doesn't look so easy anymore. And that's when the real question begins. What should you actually do with your money? Because most people don't have an investing problem. They have a wealth stage problem. They're trying to build wealth without knowing which step they're actually standing on. Because getting rich isn't one giant leap. It's a staircase. Stage 1 is survival. This is where your financial game is brutally simple. Make money. Pay the bills. And repeat. But here's the problem. Making money isn't the same thing as building wealth. You can have a high income and still have very little wealth. Imagine earning $10,000 a month. Sounds great, right? But then the money starts leaking out. Rent. Cars. Groceries. Insurance. Subscriptions. Debt. And suddenly, that impressive income doesn't look quite so impressive anymore. So the first question isn't, what's the next hot investment? It's, what happens if a major unexpected expense hits me tomorrow? Because without a financial safety net, one emergency can quickly turn into expensive debt. That's why your first goal isn't getting rich. It's building protection around the money you already have. Because financial stability doesn't make you rich overnight. It makes you harder to break. Welcome to stage 2. Stabilize. Think of your finances like a house. Before you build higher, you need a strong foundation. You can have investments, expensive possessions, a high income, maybe even a successful business. But if the foundation is cracked, everything is vulnerable. One of the biggest cracks can be high-interest credit card debt. Because debt can behave like a snowball. The longer it rolls, the harder it can become to control. So before chasing higher returns, start by stopping the expensive leaks. Then begin building an emergency fund that can absorb life's unexpected surprises. A common target is enough savings to cover several months of essential expenses. And when that cushion starts growing, something important happens. You finally get something many people don't have. Financial breathing room. You're no longer making every decision from panic. You don't have to immediately borrow money when something goes wrong. You have time. You have options. And that changes everything. And now we reach stage 3. Build. This is where your money can finally start working alongside you. Think about an apple tree. You plant the seed today. But you don't expect fruit tomorrow. On day 1, almost nothing seems to happen. You water it. You protect it. You give it time. And eventually, the growth becomes visible. Investing works in a similar way. You build ownership in productive assets and give them time to grow. And that's very different from treating the market like a lottery. Remember our SpaceX example? An extraordinary company can still have an extremely volatile stock price. A great company doesn't automatically mean a great investment at every price. That's an important distinction. Because investors often fall in love with the company and forget to think about the price they're paying. So instead of asking, what is everyone buying? Ask a better question. Does this investment fit my plan? Because once you start investing, another danger appears. Believing you have to find the perfect investment. You don't. A strong portfolio isn't necessarily built around one incredible winner. It's often built around many investments working together. That's where diversification enters the picture. Imagine putting your entire financial future into one basket. If that basket breaks, your entire plan can break with it. But spread your risk across different assets, companies, industries, or markets. And one mistake doesn't necessarily destroy everything you've built. The goal isn't to eliminate risk. It's to make sure one mistake doesn't eliminate you. But diversification doesn't mean you should invest blindly. Your investment choices should match your goals, your timeline, and the amount of risk you can actually handle. Someone investing for 30 years has a very different problem from someone who needs the money next year. Time changes the game. And so does your behavior. Because when markets rise, everyone feels like a genius. It's when markets fall that your real strategy gets tested. If your entire plan depends on prices going up every month, it isn't much of a plan. A real plan accounts for uncertainty. Because wealth isn't built by predicting every move. It's built by surviving enough of them. And now we reach stage 4. Accelerate. This is where wealth building starts to change dramatically. Instead of relying on just one engine, you start building multiple engines. The first is your income, your job, your profession, your skills, and your ability to earn more. The second is ownership, stocks, funds, businesses, real estate, and other productive assets. And the third is leverage, technology, systems, people, and capital. These can allow 1 hour of effort to create more than 1 hour of output. Think about a business owner. If they personally do everything, their income is tied directly to their time. But build a team, create systems, and use technology, and suddenly the business can operate beyond one person's hours. That's leverage. Technology has made this especially powerful. Software, artificial intelligence, digital products, content, online businesses. All of these can create scale. But here's the warning. Leverage can multiply your mistakes just as quickly as it multiplies your success. Think about debt. Borrowing can help you grow faster, but it can also make a bad decision much more expensive. The same applies to aggressive trading, margin, options, and other forms of financial leverage. So stage 4 isn't about using more leverage. It's about understanding the leverage you're using. Because the goal isn't simply to make more money. It's to create systems that can continue producing value without requiring every hour of your life. And then we reach stage 5. But this stage isn't what social media usually makes it look like. It's not about showing off a Lamborghini. It's not about proving how rich you are. Stage 5 is about something much more valuable. Freedom. Because once you've built wealth, your biggest challenge changes. In the beginning, you're trying to make money. Later, you're trying to protect what you've built. That means diversification, risk management, taxes, insurance, estate planning, and careful decisions. Because losing wealth can happen much faster than building it. And real wealth isn't about looking rich. It's about having choices. The ability to say no. The ability to change careers. The ability to take time off without your entire financial life collapsing. The ability to help your family. And still protect your own future. That's what financial freedom really starts to look like. But there's one stage where many people get stuck. Stage 3. They learn constantly. They watch financial videos. They research stocks. They compare ETFs. They follow economic news. They look for the next strategy. And they keep searching for the perfect investment. But there's a problem. Information can feel like progress even when nothing actually changes. You can watch 1,000 videos about investing, and still have no investment plan. You can read every article about the stock market and still not know how much you're actually saving. You can spend hours researching the next big company while ignoring your own financial foundation. At some point, you have to stop asking, "What should I learn next?" and start asking, "What should I actually do next?" So let's bring everything together. Stage 1, survive. Create income. Control your essential expenses. Build your first safety net. Stop the financial bleeding. Stage 2, stabilize. Pay down expensive debt. Build emergency savings. Create breathing room. Make your financial foundation stronger. Stage 3, build. Invest consistently. Own productive assets. Diversify. Think long term. So, where does that leave us? The truth is, getting rich isn't a single event. It's a process. A journey that starts with simply surviving, then becoming financially stable, then building assets, then accelerating your wealth, and eventually protecting what you've created. You don't have to climb the entire staircase today. You don't need to find the next $1 million stock. You don't need to predict the next market crash. And you certainly don't need to chase every investment that suddenly becomes popular online. You simply need to understand where you are right now and take the next step. Because wealth is rarely built from one massive decision. It's built from thousands of smaller decisions, made consistently, over years. Save a little more. Spend a little smarter. Invest with a plan. Increase your skills. Increase your income. Manage your risk. And most importantly, stay in the game. Because the biggest advantage you can have in finance isn't being the smartest person in the room. It's having the patience and discipline to keep moving forward. So now, I want you to answer one simple question. Which stage are you in? Are you in stage 1, survive? Stage 2, stabilize? Stage 3, build? Stage 4, accelerate? Or stage 5, preserve and multiply? Drop your stage in the comments. And if you're between 2 stages, tell us what you're working on right now. Because your answer might help someone else realize they're not behind. They're simply on a different step. And if you found this video useful, give it a like. Share it with someone who's trying to get better with their money. And if you're serious about understanding money, markets, investing, business and the forces shaping your financial future, subscribe to CashFlowFunda. We're here to make complicated financial ideas simple, practical, and easier to understand. So don't just watch the market. Understand it. Don't just chase money. Learn how it works. And don't try to become wealthy overnight. Build wealth one step at a time. This is CashFlowFunda. Keep learning. Keep building. And most importantly, keep moving forward. I'll see you in the next one.